Indian banks become global giants? What is India's big bank merger plan? And why public sector banks require consolidation again? India dreams of becoming a $5 trillion economy. For it needs to fund the mega infrastructure projects and banks that can compete with global giants. And that is why we are considering another round of merger of public sector banks, which is being called PSB Consolidation 2.0. Hello everyone, welcome to Vajiram and Ravi's Flash News. My name is Shubhangi Singh. Today we are going to talk about PSB Consolidation 2.0, why it is being considered, why another round of consolidation is required, and what is the forum which is considering this. So when we talk about PSB consolidation, government is again considering it. That means government is considering to merge the public sector banks, and the whole idea here is to create better, larger and stronger lenders for the country. They not only want to facilitate the capital expenditure, but they also want to help the MSMEs, which form the very fundamental important pillar of our economy. In this very idea, the newness that will be added will be through alignment. Now, there will be specialized institutions which will be brought in, for example, NABFID, basically which is a development finance institution. Then we have IIFCL, which is an infra institution, infra finance company. All of this would be aligned so as to make sure that this round of consolidation, which is known as Consolidation 2.0 for PSBs, can take our banks to the global level. In this particular context, as of now, the forum is PSB Manthan. So if you see this image, this is an older image. This is the forum which talks about how to design strategies for credit growth, how there can be better NPA resolution, then revival of private capex, how that can be done. So if we talk about Indian banking system, we already know more than 70% is through public sector banks. And it is the public sector banks which are burdened, heavily burdened with the problem of non-performing assets. In this very context, recently in 2020 only, we saw merger of many public sector banks, where banks from the number of 27 went to only 12, from 27 just to a dozen. And this exercise became very fruitful because it was considered successful. If you look at this particular data, for the financial year 2023, you will see when the total business was of only 203 lakh crores, the profit was somewhere around 1.0504 lakh crores, and in next 2 years we have seen remarkable growth where the total business have been somewhere around 250 lakh crores and the profit has gone up to 1.78 lakh crores. In this very context, there has been a reconsideration that is coming in. But before we move into the why that we are considering consolidation or mergers yet again, let us look at the history और the evolution that कैसे कैसे बैंक का consolidation जो है हमने देखा है. So सबसे पहले तो अगर हम बात करें 1969 और 1980s में, 1969 and 1980 we have seen nationalization of banks so that there is increase of state control as well as financial inclusion. Now a very simple question to you, 1969, who was the Prime Minister who introduced the idea of nationalization of nationalization of private banks so as to ensure better financial inclusion? And also tell me in the comment section what were the other things that were introduced to ensure redistribution of income across the country. Then after that, a major step was taken in 1998 when Narasimhan Committee the second came up with recommendations. They talked about 3 to 4 global large international banks, then they talked about 8 to 10 national banks, and regional and local banks were also recommended, but for inclusivity at the regional and local level. Then we have another important recommendation that came in 2014 by PG Nayak committee. Such committees are important from the perspective of your exam also. They talked about how we need governance reforms in banks and there is need for bringing together, that means merging of public sector banks. After that, when we talk about the governance reforms, we saw the biggest reform in 2017 when SBI was merged with where 5 associate banks such as State Bank of Bikaner and Jaipur, State Bank of Patiala, State Bank of Travancore, all of them including Bharatiya Mahila Bank was merged with SBI itself. In 2019 came another smaller way where Vijaya Bank and Dena Bank was merged with Bank of Baroda, and 2020 a big one where 10 PSBs were merged into 4. Now tell me in the comment section which all PSBs were merged, and PSBs were directly reduced, as I said, from 27 to merely a dozen. In this situation, the whole idea when we are talking about merger of banks, all of this was done to avail the advantages of consolidation. What are the advantages? It facilitates in improvement of rankings. That means the banks will be bigger, they will be better. How will they be better? They will be better in terms of services. Their admin costs, that will reduce. That means their profits will increase. That means government would have to invest less in recapitalization. All these advantages were reaped. But the question arises, अगर हमने ये 2020 में अभी किया ही था, within next 5 years, in the coming month, why are we again considering another round of consolidation? What are the reasons? Now let us look into that. So the reason we are considering another round of consolidation, that is consolidation 2.0, again to reap the advantages but taking up a notch. How? We were focusing on rankings, but as of now, if we look at the global rankings, in top 50 we have only SBI in top 50 global banks. If we look at other banks, we find that they are comparatively smaller than Chinese and US giants. That means we need to come with a framework where our banks are also competitive with the developed and developing economies, so that actually they can facilitate the need for increased capex, increased lending that is required in the developing environment. Second, further we want to focus on cost rationalization. Merging will facilitate the overlapping branches would be cut out, then excessive admin costs would be cut out, and there will be unification of IT systems, which is a big cost for these banks. That means again lessening the cost, increasing the profit. Then moving to other important points, stronger lending capacity. In this situation, when we are talking about being developed to a $5 trillion economy, we need to come up with mega infrastructure projects and we need funding for them. Who can facilitate with us when they have weak, burdened, NPA-laden accounts? Then that is why we want the banks to come to a level where they can facilitate such infrastructure projects. They can facilitate energy transition that we are talking about. MSMEs can get support that they require. And in this, we do not want that the government should bear the burden of funding and financing the economy's growth. So if we want to reduce the government's burden, that means the bank should be in such a position that they can manage this not only financially as per the system, and they should not be again becoming the part of NPA cycle. That will help only when there is lesser recapitalization. गवर्नमेंट को बार बार पैसा जो है इन्फ्यूज ना करना पड़े बैंकिंग सिस्टम में. इफ द सिस्टम विल बी लेडन विद एनपीएस, यहाँ पे लॉस होगा, गवर्नमेंट को इनको हेल्प करने के लिए आना पड़ेगा, और हेल्प करने के लिए आना पड़ेगा गवर्नमेंट को, मतलब यहाँ पे रिकैपिटलाइजेशन करना पड़ेगा. अगर यहाँ पर इंश्योर होता है कि मर्जर हो जाता है तो बैंक की लेंडिंग कैपेसिटी बढ़ेगी, मैनेजमेंट जो है बेटर होगा, और साथ ही साथ कॉस्ट कटिंग होगी, जिससे गवर्नमेंट को कैपिटलाइजेशन जो है कम, रिकैपिटलाइजेशन जो है कम करना पड़ेगा, और इसकी वजह से गवर्नमेंट जो है ज्यादा फिस्कल स्पेस रख पाएगी फॉर डेवलपमेंट. सो आई विल रिपीट दिस फॉर यू. In this very context, I am saying if there is stronger lending capacity which is not laden with MPAs, then only government will have the bandwidth financially to focus on development. Otherwise, they would have to facilitate the public sector banks with recapitalization. So, if we want to lessen the recapitalization, banking system needs to become stronger. Furthermore, if we want financial stability, larger capital base is required. So if the banks will come together, their capital base will increase, and that will directly help to absorb shocks, be it NPAs, be it global fluctuations, etc. Now, what seems like a very fancy picture है that all of this can be done, this comes with its own set of challenges. यहाँ पर जो advantages हैं उसके साथ जो pros हैं उसके साथ cons भी exist करते हैं. Now let us move ahead and discuss the challenges that can come in front of consolidation that we are talking about again. So the first challenge is basically the HR and cultural integration. So basically when we are talking about merging of banks, we are also talking about merging and bringing together the human sources which have cultural differences, which are coming from different parts of the country. That is why we find resistance in terms of transfers, in terms of unions, in terms of promotion delays, in terms of changing of the work style that used to exist. Furthermore, when we are talking about technology coming together, reduction of IT cost, there are technological issues also. Each and every bank, different IT platforms, upgradation is required because the work increases. For example, if the bank has to move from Finacle 7 to Finacle 10, this migration is not difficult only in terms of platform, but this migration itself will be costly to the banks which are coming together. Apart from that, there are issues such as customer disruptions. For example, if the banks are being merged, then the IFSC codes would be changed, the account numbers will be changed, the services will be delayed. Even though all these issues are short term, but this disruption will take place. This also leads to loss of customers. When we are talking about merging of SBI with their 5 associate banks, as per a survey, there were multiple customer losses which were seen and which directly went to the rival bank. Then there is also the risk of too big to fail, which we can also understand as systematic risk. Systematic risks, that means if banks become such giant players, that means they are too big to fail, and if they crumble, then that will lead to a situation like 2008 crisis that we saw in US, that it will directly hit the economy and it can have a ripple effect across the economy. So basically we will find that taxpayers or the account holders, they will be bailing out in case of their collapse. Furthermore, the most important point when we are talking about regional banks which exist to address the issues related to financial inclusion, regional requirements, that focus will be lost with consolidation. That means the local lending priorities, be it for agriculture, MSMEs, that will get diluted in the big giant setup that we are aiming for. So if we want to bring in this consolidation, as much as for the advantages, we need to also focus on the challenges so that the transition is seamless for all the stakeholders. Now let us move ahead and talk what is in this PSB consolidation in terms of impact for all the stakeholders. For government, as we have already discussed, if the PSB system becomes leaner, that means recapitalization would be probably less required. More than that, the banks will have larger base, they would have better balance sheets, they will have a bigger market share, and there will be short-term disruptions. But these advantages are any day good than this minor inconvenience that will be caused in the system. Furthermore, if we talk about employees, there are conversations about job insecurity, but the government has promised that job security would be there, but still employees are anxious that there will be issues about culture, work culture, human resources and transfers as well. Furthermore, if we talk about the gainers, the net gainers would be customers. With short-term inconvenience, they would be getting later better services, better products, more digitalization and better environment in terms of better ambience, better customization in terms of banking. and all of this will directly contribute to our economy, where we'll be finding stronger banks which will directly boost our financing. They will be finding a global place in the rankings, and which will also facilitate our credit growth. Now, this synergy that we are talking about with merging of PSBs yet again is a positive step or a negative one. You can let me know in the comment section what do you think about it. That was all from my side. Thank you so much.